Hey everyone, it's Paul with Investment Tuesday from a new location. I am traveling and a little bit of variety. You can't see back there, but it's quite nice back there. A really lovely beach, which I will get to after Investment Tuesday. But hey, we've got some serious investment stuff to discuss. What is going on with the AI mania bubble trade, whatever you want to call it? Are people like Michael Burry whacked out of their mind, crazy, to talk about, what they're talking about and to doubt that AI will be the greatest technology in history? Or maybe there's something to it. And the same is true for tech. Is there any price that is high enough for these companies? I'll give you my answer, and then I'm going to tell you, why, in my opinion, the sector, it's generally in the same territory that I believe is going to outperform all of this because it meets my going upness criteria: scarce, valuable, in demand, and unloved and hated. And as a result, all the cheap stock and assets have been bought up by people who are like, you know what, their day will come. And when their day comes, we own it all. And if you want a piece of it, you're going to have to bid it higher. All right, but before we do all that, even though it's a new location, we still got to keep the lawyers fed and happy, which is that this video and the content from ATG Digital is not investment or financial advice. It is presented to you as opinion, information, engagement, and entertainment. Next, all ATG Digital content may contain errors, oversights, mistakes. Understand that investment operations have significant risks and can lead to the loss of your principal. I, the owners, employees, contractors of ATG Digital, we own, we trade, we transact in the securities that are mentioned in this video and all content from ATG Digital. We do not take money from company managements or crypto token sponsors to recommend their stocks or crypto token. We publish a lot of free research, which is accessible to you. Free, folks, free. I tend to do macro and general, and my colleagues, Dean and Dan, they show you investment ideas and tell you why we like them. So the Substack goes out every market day. And we've got the Ballman Speculating podcast, which is on Spotify. And we have YouTube that I am on right now. We also have social media. I am pretty active on X. We are reasonably active on Instagram and Facebook. You can also choose to become a member of this channel. You would go to the homepage for the channel. Here, let me show you. Yeah, so if you go to the YouTube page, there you see that join. Yeah, you join there, and that will allow you to become a member of our channel, and you get early exclusive access to Investment Tuesday, and then once a month, bonus content, which is usually a small stock. When the crypto market is on, it will be, something in crypto, but exclusive bonus content that is only for YouTube members. And then, of course, not to be forgotten, you can also get more content like what you see here on the YouTube channel by going to atgdigital.media. Let me put that up. atgdigital.media. Please make sure that you are at the correct website. Don't take shortcuts like, well, that looks like his picture. That's the purple color. Websites can be cloned. Pictures can be cut and paste in the age of AI. So please be very careful as you go about your business on the internet today. Okay, let's get down to business here, and let's talk about some of the things that are going on in the market, which is that things have gotten pretty crazy. I mean, I wondered, and I've been talking about this for a while, and many people are complaining, Paul, you keep saying the same thing day after day, week after week. Yeah, well, that is the nature of tops. That is the nature of bubbles. That is the nature of manias. It's not like it ends in one day. It doesn't end in a week. It doesn't end in a month. I mean, if I can remember, the dot-com mania got going in 1998, and with huge volatility up and down, made it all the way into March of 2000. So approximately, I'll say about 2 years. We are coming up on AI mania about a similar time frame. I think we're coming up on about 2 years, and now the pins are coming for the bubble. The anecdotes are coming for the folks that are in the throes of euphoria and mania, which is that smart people with access to large amounts of money and with conviction and some courage are like, you know what? This doesn't make any sense. And we'll tell you why it doesn't make any sense. And there's no real logical answer. So the most famous and the one getting the greatest publicity right now is Michael Burry. Who's Michael Burry? Well, he very famously shorted housing stocks, shorted this thing called credit default swaps. Too complicated to explain in this video. But bottom line, he was short essentially the enormous housing and housing finance bubble of 2000. I'll say that got started in 2004 and made it all the way into early 2008 because real estate is a slow moving asset. Yeah, he was right. The early days were very painful, as is recorded in the movie. I think that's called The Big Short. You can see that, it was clearly too early and he really paid the price for that.
I just know how to read numbers.
How big's your short position right now?
Just 1.3 billion.
And the premiums?
Well, we pay roughly 80 to 90 million each year, which is high, but I was the first to do this trade. Watch, it will pay. I may have been early, but I'm not wrong.
It's the same thing. It's the same thing, Mike.
You're managing a fund of, what, 555 million? In 6 years, it'll all be gone. On one bet.
No, the second quarter of 07 is when the adjustable rates kick in and the defaults will skyrocket.
Yeah, says you.
How much is eligible for withdrawal before they do, say in the next 2 quarters? If your investors panic.
302 million.
My God, Mike.
No one will pull out. That would be suicide. I mean, I'm down 17% for the year, but if they trust me, and they trust me because
No
I've
one trusts you.
I
No
sent
one.
several emails to my investors letting them know that the second quarter of 07 is when our housing positions show returns, and I've been very clear.
People will withdraw their money.
George, that would be so stupid. I mean, if the fund's capitals drop too much, then the swaps contracts are voided, and then the banks get to keep all of the collateral.
Wait a minute. Wait.
All of it.
What? The contracts are voided? The contracts are voided? Holy shit! Oh, motherfucker!
Michael, give me my money back. Michael, do you hear me? I want my money back. Give me my fucking money back. You motherfucker.
Is he too early right now? That's what everybody wants to know, because everybody's like, I don't want to let go of any gains. You know what? I'm not. There's no way to really know. I mean, there are definitely signs that the air is beginning to leak out of these stocks. And one of the signs is the emergence of people who are smart. They're not dumb. They have track records that are impressive. And most importantly, they are putting money where their mouth is. And they're telling you, hey, this is a bubble and we think it's going to burst. Now, there is a group of people who's like, Paul, you shouldn't be talking about this. This is bad. All you should do is be rah-rah and be cheerleading these stocks on. Listen, folks, that's not my role. My role, is to use my judgment, to use my experience, to use my understanding, to use my research, and provide content that you can, let it go through 1 year and out the other year. You can write it down. You can go research it for yourself. You can do nothing. You can turn this off, whatever it is. All right. And then go, listen to somebody that is rah-rah. Go listen to somebody that is cheerleading, stocks to go from 100 times sales to 5,000 times sales. I'm not going to be that guy. You know why? Because I have seen this movie before many times. That is the benefit of experience. That is the benefit of having lots of scars, investment scars, by being in markets for 30 plus years. I mean, I can remember the 1987 crash, even though I was in college, the 1991 recession. There were multiple crises around international things through the 90s, but that was on the space for bull market. I definitely remember the top in 2000. And I sold all my stocks way too early. I speculated like crazy and made some good money. I mean, it was just a long time ago, but I sold everything in September of 2000, and for the better part of 6 months, I felt dumb. I just felt dumb because the stocks just went higher and higher and higher. And my friends who were not in finance, not managers of money, not analysts, they used to laugh at me. I used to be mocked, be like, and they would tell me like, so-and-so stock is up, 300% since you said that it might go down. I was like guilty as charged. But you know what? 2 or 3 years later, all the jibes, all the insults went away. I had my money. And you know what? Very sad and unfortunate. Almost none of those folks sold, even as their gains dwindled from extraordinarily high numbers, from whatever, 1,000%, 2,000%, down to, 600, 500. Why? Well, because psychologically, once you believe that you're rich, it's very hard to let go. It's very hard to let go. So I've been saying this and repeating this. If you are playing around with the AI, and I'll throw tech in there, mania, have a plan. Have an idea that, hey, it's never different. And the worst thing you can ever hear in markets is this time is different, which is being widely bandied about because we have 1 or 2 generations of new investors, Gen Z and millennials, who have never really gone through a long down market cycle. Generally, during the periods when they have been invested, the markets have mostly gone up, and they just can't imagine that there can be a period when the stocks that they have bought at very high prices either go nowhere for a very long period of time, which is the same in some way. That's like obviously a much more pleasant, kind of crash. And you kind of experience that in the 1970s where stocks stood still for like 7, 8 years, right? I mean, and it started from very high hopes. But the other way is the 2008 style crash where everything goes down. What nobody can imagine any of it. And everyone thinks that, everything is sort of like guaranteed because AI is different than every innovation that came before. So here's Michael Burry's X account. And as someone that, I have, an MBA, I sat for my CFA exam. I don't put it on my on my profile because they have all of these things that you have to require. It's easier just truthfully to not deal with it. But I understand accounting. I mean, I can dig into a balance sheet, income statement, cash flow statement, the footnotes, and so can Michael Burry, right? He's not a dumb person because there are a lot of people on social media calling him dumb, calling him stupid, because, the stock prices keep rising from where he essentially has made an enormous bet that they will go down. Now, I don't know if he's, in real time, if he's going to turn out to be right in 1 week, 1 month. However, I feel pretty good in saying that over the next 3 years, he'll be vindicated because I can see, and, I'm not going to go and explain this, but essentially he has worked out what is the accounting trick that tech companies are using that, to essentially boost their earnings and to produce these enormous beats and raises, that everybody loves, right? And it has to do with something called depreciation, which in one word, when you buy a big piece of equipment as a company, you don't actually account for it the day you buy it. You account for it over either 3 years, 5 years, 7 years. If it's a building, it might be 15 years. And so if you understate that period, if you're or overstate that period, you can suddenly have very large earnings this year, next year, but then after a certain point, you got to account for it, and suddenly the beats and raises will disappear. Now, the question that people will naturally ask, because people are human, they're like, well, Paul, we can hold on for 2 years. Yeah, maybe. Or maybe the market cottons onto this, and the supply comes into the market. I don't know which way it will go. It does look like for sure that there are signs. There are signs that money is sort of pushing against this AI nirvana narrative. And I'll repeat it. If you're going to play, understand that from my experience, from my judgment, it looks like mania, it looks like a bubble, and it's never, ever different this time. It will end in some way, shape, or form, and the end will never be pleasant. So if you hold tight to all of your gains for too long, you might end up like my friends from 1999, 2000 and have nothing. So, okay, let's move on from that and move on to where I think you actually want to be. All right. And it's, it reminds me a great deal of what happened when actually I joined Banyan Hill. For those of you who are new to this channel, don't know what Banyan Hill is, that was a publisher that published my research. They were an investment newsletter company. And I joined them in January of 2016 after a kind of mini crash for growth stocks. And everybody was super bearish back then. So I remember telling my publisher, I was like, well, I'm bullish. And they're like, what? Well, can't you see that the prices have fallen? And I said, yeah, prices have fallen, but I can also read a financial statement. And I have also enough experience to kind of gauge the mood of the markets, right? I mean, we are social animals and we mimic and follow what other people do. So when most people are bearish and negative, we will be bearish and negative. When most people are bullish and positive, we will be bullish and positive. It is difficult at low prices when the vast majority of people are like, I don't really think I want to be touching that, to go in there and buy. However, with 30 years of experience and having made money for myself, having made money for subscribers, having made money for hedge fund clients, for big institutional clients, billionaires, and generally people with a lot of money, I can tell you, this is the place to be. And just like in 2016, when people doubted me, were skeptical of me, when I said, we want to buy semiconductors for the Internet of Things, and we want to be in these growth stocks like Chipotle, these will all go up because of the millennial generation. We had a lot of themes. I know people will be like, but Paul, not all your things worked out. Yeah, find me an investor that has like a 100% like success rate, right? And if you can find them, let me know because I want to invest in them too. Anyway, the same skepticism, the same cynicism, the same mocking has ensued. I've gotten some already through social media where people doubt. And I'm like, hey, you doubt. The people that choose to believe, yeah, you've got, in my opinion, you've got a real chance of making big money. All right. So what's the sector that is, in my judgment, the place to be? Well, it is the hated. How do we know that it's hated? Because, people say, well, I want to buy when blood is in the streets. Yeah, the thing is, people trot out all these things, but nobody actually really does it. When I say nobody, I mean like general investment public, individual investors, retail investors are by nature momentum investors. We tend to chase the stocks that are rising the fastest. And why? Because we want short-term gratification. That is in our very nature. So investment that is against the grain is not natural to too many people. And so look at this post, which I found truthfully kind of amazing. Hated and left for dead. Energy just makes up 2.7% of the S&P 500. I mean, 2.7%. Apple by itself is like 6 or 7%. Meanwhile, we have the world's primary source of energy, right? I mean, you might think, well, Paul, I mean, what's the big deal about crude oil? What's the big deal? Yeah, tell me how your life gets on when there's no gas at the gas pump, when there is no heat in your house or air conditioning in your house, or like, just imagine from the moment you wake up, what do? You flick a switch, you look at your phone. Yeah, you know what I see? All energy sources, one after the other. And that incredibly important part of human life is down to nothing. You know what I smell? Yeah, this is the place to buy. You know why? Because here these assets are dirt cheap. They are incredibly valuable. They are scarce. I mean, we have not found any major oil fields in, I'll say, 15 or 20 years, and I'll get to that. And then look at the forecast, which is like everybody is bullish about AI. I mean, like, well, what will power all of these AI server farms? Will they run on air? Will they run on water? I know people are like, well, Paul, we got uranium. We haven't put up a uranium plant in 10 years, maybe 15. They're still tearing down uranium plants, in nuclear plants in Germany. So a lot of these things are delusions, where people are using things to rationalize and justify, why prices can go higher. And, you're entitled to that. I'm not here to fight you. I'm here to provide my view. It's my opinion, just like my disclaimer says, you can let it go through this year and out the other. But for my money, I will tell you, energy, right? Energy is the place you want to be in all its forms. We have at ATG Digital gigantic bets, on electricity, which is becoming the primary way by which we power, I'll say, the vast majority of human life. I mean, certainly, this computer would not work without energy that I'm recording this on. My phone wouldn't work. I've got a tablet with my notes on here. That wouldn't work. What else do I got? Well, I got 2 Teslas at home. They suck up electricity. And so very clear that these assets are extraordinarily undervalued. Expectations are very low. The prices are very low. Why? Because nobody wants them right now. We are all maniacally just following the crowd into AI and tech. And that is, in my experience, 30 plus years of experience, a recipe for you want to be on the other side of this, not with the AI and tech folks. We saw this happen in the 2000s, and I believe we're going to see it happen again. Let me shut down some of these other things. What are the other reasons for being in energy? Well, one of the reasons to be in energy is that for the last 20 years or so, as part of, I don't know what the right word is, people coming up with, I guess, an ideology and a philosophy that said, look, these fossil fuels are dirty. These fossil fuels pollute the world. There's climate change, and we don't want them to exist. And as a result, pretty much all of the world, minus China, decided that, we are going to make it very difficult for companies to go and explore for new energy sources. And we're also going to make it very difficult for existing companies to actually go about their business. We are going to fine them. We are going to provide huge regulations that make it very expensive for them to actually operate. As a result, for the last, I'll say, 20 years, we really haven't found any large new energy sources, which means now, as in this post, you can see, he says for 5 years. The truth is, I've been monitoring this for longer than that. The IEA, the International Energy Agency, supposedly the smartest, brightest people on the planet, regarding energy, have been telling us that, peak oil was imminent. Truthfully, I believed it myself. I mean, I'll put my hand up and say, I believed it myself because they kept repeating it and they kept producing, charts like this. Well, now they're telling us, oh, by the way, our base case scenario was wrong. Oil demand is going to grow until 2050. Whoops. 2050. I mean, they were telling us literally until 2 years ago. I put up posts from the IEA saying oil demand is going to shrink. I believe them. Now they're like, whoopsie. Oh, sorry. Yeah, actually, we're going to need oil for at least another 25 years. And guess what? Because we made it so difficult to go and find new oil or even maintain existing oil, yeah, we're going to, this is a scenario where these things are scarce, they're valuable, they are cheap, and they are beginning to see incremental demand. If you go and look at the 52-week high list over this last week or so, as tech and AI was seeing selling, oil and energy was seeing buying. Tech and AI, on those days when they go up, oil doesn't really go down very much. But when this goes down, this doesn't go down very much. It's a sure sign that there is buying that is coming into the market and at low prices where they're not afraid to pay 52-week highs for this. All right, I'll share this one as well with you, which talks about, let me shut down some of these other tabs. I like the way that he puts it, which is that because we have not been exploring for oil, we don't really have genuine emergency reserves. I know what people are going to say. Well, Paul, what about the Strategic Petroleum Reserve? China has one. The U.S. has one. Yeah, I mean, that'll cover us for about a year. It doesn't make up for 20, 30 years of underinvestment. So as Eric puts it, which is a good account to follow, the oil market is now like a house without fire insurance in a neighborhood full of arsonists. And what's he referring to? Well, look at what's going on between Russia and Ukraine. Ukraine is absolutely targeting Russian oil assets. President Trump is after India, after China, after Turkey, the biggest buyers of Russian energy, to stop buying it. The question becomes, if Russia is shut down, where will the oil come from? Where will the natural gas come from? Yeah, well, you will have a surge in demand and a supply shock, which will send, my view, send the stocks of companies that explore, produce, operate in any of these energy sort of sectors, will send them higher. So that is another reason to be in this. Look at this comparison, right? I mean, shows you what an incredible bear market that energy assets have been in. Oil divided by the S&P 500 is at the same level as in 1998 and 2020. In both cases, oil massively outperformed the S&P 500 after. 2020 was only 5 years ago, but if you remember, 2020 is when we had negative oil prices because everyone went to short oil, betting that, after COVID, we will not need any oil. And the markets, oil contracts are traded, using futures, and you have to take delivery of these barrels. It's not like you can store them in your backyard, right? You got to find like a place that is actually registered, to store oil. And those were all full. So people were so desperate to get rid of their oil that it traded at a negative level. So, that was a real market extreme. So in 1998, as he says, just like now, the dot-com technology bubble, that was the internet bubble, sucked all liquidity out of the market, especially. And then 2020 oil went negative. And then today, AI is absorbing all the liquidity while trade wars, and also the Russia-Ukraine war has, genuine scarcity. And I like the way that Lucas puts it. At extremes, you want to rotate out of hype and into hate. I like that. So that's where I would tell you, for my bet, that's where I would be at. Now, I know that most people, like I said, I mean, the nature of of humans is that we are by nature momentum investors. The reason we're momentum investors by nature is that we want our rewards quick. We generally don't like to be alone doing something by ourselves. We like to be doing what everybody else is doing. So I know that, people be like, boring, Paul. I'll go, snore and, all of this. Hey, that's fine. Come and check back in about 3 years and we shall see where things are. Okay, finally, enough on all this. Crypto. Bitcoin is now under 100,000. And what's going on? Well, a few points here. The 4-year halving cycle is clearly, it's gone. Like, I'd spent a lot of time coming up with all these schedules, which, I laid out in my, live stream for the halving. Yeah, none of that worked out, right? The peak, according to that schedule, was supposed to be about now. And, put up my hands and say I was wrong. I said $1 million. We're not even close. We're not even at 100,000. Essentially, we have stood still since hitting 100,000 back then. And yeah, clearly extrapolating the last 3 halvings into this one, wrong, completely wrong. So what does it look like? Well, we could bet on a surprise. I did see somebody on X saying, let's see if I can find it, because I did think that, if I wanted what, Dan and Dean would call hopium, this would be where I would look for it. Let's see if I can find it. Okay, I definitely have to put this up because this is definitely a really good bit of hopium, if you will. This is from someone who I don't know. Maybe this person is a credible analyst for Bitcoin, but this was trending on X, and he says that in the next 45 days it's going to $220,000. Hey, I want to believe it, and I would love it. All of us would love it. I can see a recovery for sure, because definitely, if you just think, we were at 100,000 about like December of last year, which was like, with a lot of hoopla, including me, we celebrated 100,000 and we're still here about 1 year later. So, I mean, I would love for this to be true. My best bet is that we are going to see a grinding recovery, and it is going to be similar to what we have seen so far, because clearly that is the pace at which the money that is coming in is willing to bid up, and then the supply that is willing to sell to that money is willing to supply out, which is that it's very clear now that that range is somewhere in the, between 100 and 125,000. And until that supply is extinguished, we will sit in this range. And at the extremes, when we have some level of fear, either for, just random reasons, or maybe some geopolitical event, some market, NASDAQ goes down, everybody sells, we'll come to somewhere 100. And then when there's a reversal, we'll approach 125. Do I think this is the peak? I don't think this is the peak. I do expect Bitcoin to recover, but this is a very different market because it is driven by different things than the previous halvings. That is my conclusion, which is that it's driven by money supply, and money supply continues to be relatively tight. Money supply means, what the central banks of the world are willing to sort of like issue. And the central banks of the world are all relatively tight. Yes, they're cutting interest rates, but they're relatively tight. Second thing is inflation, which continues to be well above levels where they were in 2019, but they are between 2 and 3%, which is not a historically high number. Nonetheless, it is above 2%, which supports people buying Bitcoin as a hedge. And that's part of the new buying set. That's an institutional buying set that's coming in. those folks are not going to, pay 100,000 today and $1 million tomorrow, right? And they tend to be a little bit more rational. They're not completely rational. I mean, they like having a good time too. And generally it's institutional demand that is putting it. So if I was going to say, I'll say it's going to be slow and steady. It's not going to make a lot of people happy. I think, we'll go from troughs to peaks of 25 to 30%. I'll say recovery to the old high by January, maybe February, and new highs in 2026. Throw out levels out there of 150K, which is, not heroic. 200K, would be good. 250, I'd say, outer edge. Time frames, I'll say June for 150K, September for 200K. I don't expect a crash like from the previous halvings as well. That's one of the upsides, in my opinion, of like this kind of movement, which is like before, we also used to be like, we'll have a big high and then we have a 70, 80% crash. I don't think we're going to have an 80% crash. Instead, I think we have sort of more capital market style, plus 20, negative 20, up and down, until the demand and supply shift where there is so little supply left from all of the OGs that mined their Bitcoin for, $100 and $1,000, who essentially providing liquidity into this market. When they're gone, we may go back to, the post-halving cycle. I mean, that seems unthinkable right now, but that's definitely, a possibility. So that is Investment Tuesday for today. We covered the stock market and the AI mania bubble, tech obsession, as I call it, where to go to be away from that. Historical evidence and research that shows you want to really be, when prices are this high for, the bubble assets, you want to be on the other side of the boat, and energy is where you want to be. Crypto, yeah, we need to lower expectations for, what the annual rate of growth will be for these assets. Why? Because, well, at very high prices, clearly there are people willing to supply, Bitcoin, Ethereum into these markets, and we need that supply washed out. And just remember, Bitcoin's $100,000, right? Ethereum's $3,000, right? These assets just came into being literally like, Bitcoin in 2009, Ethereum, in 2011. So yeah, it was probably inevitable at some point in time that we were going to hit some point where demand and supply met and had its equilibrium, and where, it was going to take some time to sort of digest and churn through. All right. Thanks everyone for attending Investment Tuesday. This is Paul saying goodbye.